Good morning, everyone. It is with great pleasure that I welcome you to the November edition of our bi-monthly social media tax chat. The title of this month's edition is Review of Decided Tax Cases in 2023. By way of introduction, I am Olaomi Olaitonfadoju, a senior manager in the Tax Regulatory and People Services Division at KPMG Nigeria. And I will be your moderator for today. There are several decided cases that have shaped the face of tax practice in 2023, say over the last 11 months. It is important that we keep ourselves abreast of these cases and their impact on our tax and finance decisions and operations as a whole. I have here with me today Martin Zaroge, who is a partner in the Tax Regulatory and People Services Division of KPMG in Nigeria. Martins has over 16 years of professional experience advising clients on tax structuring, tax risk management, corporate tax planning, regulatory advisory, and several other projects for local and multinational organizations in the oil and gas sector, power and utilities, consumer markets, and high net worth individuals and investors. Martins has authored several articles in both international and national journals on the power sector, amongst other topics, of interest to investors in the country. He has a degree in petroleum engineering from the University of Benin in Nigeria. He is a fellow of the Institute of Chartered Accountants of Nigeria and also the Chartered Institute of Taxation of Nigeria. It is with great pleasure that I welcome you, Martins. Good morning, Martins.
Thank you very much, Amy. I was struggling to recognize myself as you read out that citation.
Thank you, Martins. So like I said earlier, the topic for the day is a review of decided tax cases in 2023. So what we'd like to do before we deep dive into, details of the tax cases, how they impact business operations, we would like to just, take a poll. We have about 5 questions. We'd like to understand, where the audience is, fill your polls, what you know about the rulings in the last 11 months. So we'll be sharing on the screen a barcode. You can turn on your cameras and then scan the barcode, which will take you directly to the poll questions. We would also be posting the link in the chat box. So please feel free, turn on your camera, scan the barcode. It will take you to the poll questions. Very easy peasy questions with options for you to choose. Thank you. I can see from the chat box, I can see our guests that are joining. Thank you for joining the webinar. We promise you that it's going to be a very insightful session. Please turn on your cameras and join through the barcode that you have on the screen, or you can as well click the link in the chat box. Okay, so we will go right ahead to take the first question, the first poll question, and I'll be reading it out loud. So it says, how familiar are you with the various tax rulings issued during the course of the past 11 months? I repeat, how familiar are you with the various tax rulings issued during the course of the past 11 months? We have 4 options. Are you very familiar? Option B, just enough knowledge. Option C, little knowledge. And option D, none at all. Oh, I can see a lot of people have, chosen the option that they have little knowledge. About 47% have little knowledge, 27% just enough. 13% are actually very familiar with all, the decided tax cases, and about 11% don't even have an idea of, the tax cases that have been decided on in 2023. Okay, that's fine. So I think the majority, have gone for little knowledge, and that's why, we're here on this tax charts edition. We'll ensure that by the end of this session, you have at least enough knowledge to assist you with your business operations. Thank you very much. I can see people are still responding. Little knowledge has it, so that's fine. Please, we'll move on to the second poll question. And the second question is, was there any particular ruling? And I think this would apply to those that have little knowledge, and just enough knowledge, or those that are also very familiar. Was there any particular ruling during the last 11 months that had an impact on your operations and planning? Oh, I apologize for that. I can see another question on the screen. So it says, how would you rate the overall quality of tax rulings this year? The decided cases in 2023, were the rulings fair? Were they excellent, such that, it was in accordance with the laws? Was it poor? About 89% of individuals have, chosen the option that even the tax rulings the quality was fair. We have 10% saying excellent, and then 5% saying poor. So I can see that people are still trying to key in their answers. So the fair answer has it. So it seems like a majority of us on this tax chart believe that, the overall quality of tax rulings this year was just fair. So over to the next poll question, please. So the question says, do you believe that the relevant courts applied the tax laws fairly and consistently in arriving at its judgments this year? So the options: on an average, yes, and then yes in all or most of the cases, and then the third option, on an average, no, and then the final option, not at all. So not at all is saying that the relevant court did not apply the tax laws fairly in arriving at the judgments this year. So we have about 93% of saying yes, on an average, yes, and about 6% saying yes in all or most cases, and 6% saying on an average, no. So we do not have any participant that has chosen the option of not at all, which means that it's either for some of the cases on an average, yes, in most of the cases, yes, and then maybe on an average, no. So thank you. We'll move on to the fourth poll question. So the question goes, do the rulings strengthen your confidence in the tax arbitration system and provide you with additional comfort? So is it a yes? Are you confident in the tax arbitration system we have here in Nigeria? Is it a no, or I'm not sure? So where do we stand? About 62% of participants are saying yes, that with the tax rulings that we've had, in the past few months, yes, I am confident, in the tax arbitration system in Nigeria, and I have comfort. I'm willing to, take, further disputes to the court. We have 29% saying, no, I'm not sure. And then we have 14% saying not at all. I still do not have, even with the decided cases in 2023, we still do not have confidence in the tax arbitration system. Thank you very much. Can we have the final question? So this question will definitely apply to those who have a little bit of knowledge of, the decided cases. So it says, which tax case do you believe had the most significant impact on taxpayers? Is it the Bold Operations OU versus FIRS, the MTN Nigeria versus FIRS, or the Checkpoint Software Technologies BV Nigeria Limited versus FIRS? I can see 100% on the MTN versus FIRS. It seems like a lot of people are aware of this decided case. about 7% on the CST case with the FIRS. And it seems like a lot of us, or a lot of participants, here are not aware of the Bolt Operations OU versus the FIRS case. Or maybe we are aware and it really did not have significant impact on our business operations. Okay, so thank you everyone for participating. We can see here that yes, I think the case that had the most significant impact on most of the participants here is the MTN Nigeria versus the FIRS case. Okay, so thank you very much. This has indeed assisted to, help us know where we are, feel the pulse of the audience. We know the task cases that had, significant impact on your businesses and operations. So thank you for taking the poll questions. So I'm going on into the session itself because it's really packed and it's full. Martins has a lot, to give us, and a lot of knowledge and wealth of experience. So it seems as though tax disputes are actually becoming very prevalent in Nigeria now, especially in the manner in which the tax authorities, both state and federal levels, are going after corporate bodies and individuals for non-payment of tax or inadequate payment of tax. So therefore, it seems like there's an increased need for tax arbitration in Nigeria. First, Martins, we would like you to please explain to us how the tax arbitration process works in Nigeria, because it will be useful for us to understand this before we take a deep dive into the details of each of these cases and the implications for our business operations. So over to you, Martins.
Thanks very much. So this is primarily a special question because I'm certain that most of our participants probably already know how this works. Now, the first point of call on the conduct of any exercise would be the tax authorities. Since it's a tax case, you would have to be dealing with a tax authority. So if you do have disputes with an office of the tax authority, in practice, what will typically happen is that the decision to escalate a matter will primarily, most of the time, be taken by the management of that tax authority. So you may be dealing with a particular tax office, and then you are having challenges closing out on any particular matter. The first thing you probably do is, as much as possible, try and engage management of that tax authority and see if you can come to any suitable conclusion or landing. And if you are unable to do so, what you typically will find in practice is that the tax authorities will issue what is called a notice of refusal to amend. So if they issued an assessment, you are comfortable with that assessment, you believe that it does not reflect your actual tax position, or some interpretation that they take to you do not agree with. You've consulted with your tax advisors, consulted with your lawyers, and they also share the same view with you, that interpretation or that position taken by the tax authorities are not reflective of the law, the intention of the law, and also your actual operations. You then challenge and contest that position. So if the tax authorities refuse to move their position, what they will most likely do is issue what is called a notice of refusal to amend. Once you get a notice of refusal to amend, you can then approach the tax appeal tribunal to register your continued challenge of that tax assessment. So what the tax authorities are saying is that we will not amend or change our position, and therefore you will need to appeal to an authority that is in a sense higher than that of the tax authority in order to be able to get them to shift grounds. And that's where your appeal will go to the tax appeal tribunal. It is also possible for you to approach the tax appeal tribunal proactively, even when you've not received a notice of refusal to amend from the tax authorities. We've seen instances where companies have said, oh, we've sent a letter to the tax authorities responding to their position. We haven't gotten feedback formally. They haven't told us that they're not going to change their position. But we would like to have closure on this matter as quickly as possible. And we think that they are taking their sweet time with coming back to us. So knowing fully well that the decision of the Tax Appeal Tribunal will be binding on the tax authorities. So irrespective of what they do when they complete their review of your position, if the Tax Appeal Tribunal has taken a position, that position will be binding on them. So you can proactively then reach out to the Tax Appeal Tribunal, even when you've not received a notice of refusal to amend, and there is established jurisdiction in this regard. So the Tax Appeal Tribunal, whether you go to them proactively or you are going in response to a notice of refusal to amend, would review the particulars of your case. They will take feedback from both you and the tax authority, and then they will give their own ruling. It's supposed to be like an independent arbitration panel that serves as the first port of call for adjudication of tax disputes. Now, if you are still not satisfied with the ruling of the Tax Appeal Tribunal, you then have the option to appeal to the Federal High Court, who will then retain jurisdiction over that matter. If you are happy with the decision of the Federal High Court, you will have the right to appeal again to the Federal Appeal Court, and then subsequently the Supreme Court. The Supreme Court is the final arbiter on all tax issues, the same way the final arbiter on all judicial issues in Nigeria. So that's really the process that will take place. So a number of the rulings that we'll be considering today are those that are passed through all of this process. Some of them will be rulings issued by the Tax Appeal Tribunal, some by the Federal High Court, some by the Appeal Court. But that's the process.
Thank you very much, Martin. You took the words right out of my mouth. I was going to say that it means that a lot of these companies, they had to go through this process, this arbitration process that you have, highlighted. So thank you very much for that. So we'll be going in to discuss the cases one after the other. And the first case we'll be discussing, which is very interesting, is the one between the Bayelsa State Board of Internal Revenue Service and Century Energy Services Limited. Century CESL, that's what I'll be calling the company going forward, is the respondent, and Bayelsa State is the appellant. So what happened in this case? What are the key issues? The Bayelsa State Board took to the TAT CESL. It stated that CESL failed to file and pay or remit payee taxes, development levy, and a certain levy called the Bayelsa State Infrastructural Maintenance Levy from 2021 to 2021 financial year, tax year, sorry. And therefore it raised a best of judgment assessment amounting to about 264 million naira. This amount was inclusive of interest and penalties. And there were several correspondence, between the Bayelsa State Board and the respondent, which is CESL. CESL, on the other hand, claimed that it was not liable to the assessment in the best of judgment assessment, based on the fact that it neither had an office or conducted any business activity in Bayelsa State. And also, the company questioned the Tax Appeal Tribunal's jurisdiction to adjudicate on claims and reliefs. That's basically the payee taxes, the Bayelsa State Infrastructural Maintenance Levy that I just spoke about, and the development levy. So what exactly was the summary of this decision? What did the court, hold after considering the claims of both parties? So the TAT, I'll be calling the Tax Appeal Tribunal TAT going forward, it affirmed its authority to adjudicate over disputes arising from the operations of all acts and all tax laws listed under the first schedule to the FIRS Establishment Act, including the PIT Act and all other tax laws. Also, the TAT established that CESL's liability as a review of documents showed that the company did enter into a contract for the provision of services, to a certain company or fields located in Bayelsa State, and it carried out these services through its itinerant workers. And also the court held that in accordance with the relevant sections of the PIT Act, that the company was liable or had the obligation to deduct payee taxes from the employees, that's the itinerant workers, and remit same to the Bayelsa State Board of Internal Revenue Service. So in summary, the TAT did rule in favor of Bayelsa State Internal Revenue Service. Just to provide a bit of background or clarification for those of us that do not have understanding of who itinerant workers are. So itinerant workers are simply individuals that work in different places for short periods of time. So as we're aware, payee tax is paid on a monthly basis, and it may be difficult, in certain situations to determine if an employee would qualify as an itinerant worker until the end of a period, by which time the tax is already due, that's the payee tax is already due and should have been remitted. Therefore, Martins, considering these circumstances, how can companies account for tax on itinerant workers in light of the judgment?
Okay, thanks, Wumi. I think this judgment brings a lot of issues to the forefront. And so before I go into your question, I would like to also comment on some of those issues that are very pertinent of this particular judgment. I think the first one is that it was the Bayelsa State Board of Internal Revenue that approached the TAT rather than Century Energy Services Limited, which is very rare because, like I mentioned in the past, when I was talking about the process of arbitration generally, I think I talked about people approaching the tax appeal tribunal when they in a sense, feel aggrieved and they've received a notice of refusal to amend from the tax authorities. That wasn't the case in this instance. So Century did not feel aggrieved sufficiently enough to approach the TAT. There are also instances where people have approached the TAT proactively saying, I haven't received a notice of refusal to amend, but I'm a bit concerned that this matter is pending and I would like to see some closure. So I've gone to an authority that is in a sense higher than the tax authority. In this particular instance, it was the Bayelsa State Internal Revenue Service that actually proactively went to the TAT and said, we are having this issue with Century and we would like your interpretation of how the law should be interpreted and applied in this instance. Now, the Century's position was primarily based on two things. One, we do not have an office in Bayelsa. We do not have any activity in Bayelsa. And so we don't see why we should have any business with the Bayelsa State Internal Revenue Service. That was one. Secondly, we don't think that the TAT has jurisdiction in the first instance to be handling matters such as this. So now the TAT, first of all, discussed those two matters. I was a bit surprised around the issue of we don't have an office because it was a PAYE matter. And as we may all know, PAYE is a tax that is paid by employees. So it doesn't matter whether the employer has an office in a particular state. If you have employees that qualify to pay tax in a state, whether you have an office in that state or not, that obligation to account for the PAYE due from those employees would still lie with you. So it was a bit surprising that they went to the argument that we don't have an office, rather than the argument of we don't have employees resident in the states. So that was one. The second issue was around the TAT's jurisdiction. Now, there are a number of people who have always assumed, and I hear that quite a lot, that the TAT is focused on issues with the FIRS, Federal Land Revenue Service, that the TAT is an arbitral court set up to advocate between disputes between companies and the FIRS. But like the TAT rightly stated in their ruling, if you look at Section 59.2 of the FIRS Establishment Act, that states all of the issues or all of the laws that are under its jurisdiction, It also includes the Personal Income Tax Act. So the TAT was somewhat right in saying that it had jurisdiction in that particular tax dispute. Now we come back to the issue of itinerant workers. Now it's a very, very tricky matter. Now, because like we all know, payee is paid on a monthly basis. Now, if you look at the definition of itinerant workers, it requires that you must have spent at least 20 days for in at least 3 months in a particular state to qualify as an itinerant worker. Now, it means that if I go for the first 20 days to Bayelsa, I probably will not qualify as an itinerant worker. I will still look at where is my place of primary residence, which in many instances, which in this instance may have been Port Harcourt, may have been Lagos. Now I do another 20 days, 3 months later. Still, I may not qualify as an itinerant worker. So when it comes to the end of that month, and my employer is remitting my tax, they probably still focus on where is my primary place of residence. And maybe it takes another 4 or 5 months, by which time I'm getting to the end of the year, before I then do the last 20 days in Bayelsa and then qualify as an itinerant worker. Remember, I would have paid my taxes in the other 2 months in which I spent time in Bayelsa doing some work in Lagos, where I normally reside, because I still have not qualified as an itinerant worker. So by the time it then comes to the 3rd month, where I then qualify, what do I then do? Do I go back and say, oh, Lagos State, refund the taxes that are paid? Or do I then go and pay again to Bayelsa State? So the law seemed to take cognizance of this challenge, because it then already states, and it was a bit surprising that wasn't also considered and in the argument that was put forward, and also in the ruling that was made. Because the law does provide that if you pay taxes in any state during the course of the year in which you are an itinerant worker, you should be given credit for that payment. Now, because there is always a strong drive for internally generated revenue by various states, I understand that a number of states may not be very keen on that arrangement, where you say, oh, I paid the taxes in Lagos, so I cannot pay the taxes in Bayelsa. So what I would say in practice is, most of us, we already understand our businesses. If you have an idea that someone, by the nature of the work that they do, may probably qualify as an itinerant worker in a particular state, then I would say that as you go along, you begin to make provision for it. And therefore, even in the months, by the time they do the first month, because you know what their schedule would be like during the course of the year, and you know that they would spend time in Bayelsa that would qualify them as an itinerant worker. In those months where they qualify, in those months where they spend time in Bayelsa, even before the qualification is completed, you may make provision to pay the tax in that particular state. Now, if you are uncertain, which may be the case for a number of people, what I would advise is that even though you paid the taxes in Lagos, when you get to the last quarter of the year, you can then do what I would call a reconciliation. And then if you believe that there is any instance where someone has qualified either during the course of the year or may qualify before the end of that last quarter, you can then, from subsequent payments that are due. So I've done my reconciliation. I've seen that I should have paid an amount to Bayelsa because of the fact that this person qualified subsequently or may qualify before the end of that year. I will recover the payments. I will make that payment to Bayelsa and then recover the excess payments from the amount that is due before the end of that year to Lagos. So I would use that last quarter to do some sort of reconciliation and ensure that I have paid the appropriate taxes to the appropriate tax authority, where I do not have the ability to predetermine. But if I can predetermine, if I know what the schedule of my activities will be and what employees will be performing what sort of functions across the various states of the Federation, then I would proactively also begin to remit the appropriate taxes. I know that it is difficult because for a number of employers, it's a very straightforward process. At the beginning of every year, you ask your employees, where is your primary state of residence? Can you provide me with some sort of evidence that that's your primary state of residence? And then you then set them up in your system in a way and manner that allows you to remit the appropriate taxes to that state tax authority over the course of that year. And don't want to change that during the course of the year. But you need to be very conversant, you need to be very aware that you may face these issues when you have employees that then qualify as itinerant workers. And like I said, it has no, the fact that you don't have an office or a base in that state is not relevant. It's your employees, the taxes that are due from the employees. You are only serving as an agent of government for the collection and the accounting of those taxes. They are not your taxes. So your own residence or your own location in that state may not matter. It is whether your employees qualify to pay tax in the state. That's the most important thing.
Thank you very much, Martins. Thank you so much for that response. From the explanation that you provided, what I've seen that the key takeaway is basically for us here is that firstly, we should ensure that, we endeavor to have adequate information and documents requested by tax authorities, to ensure that we provide them promptly to avoid being assessed to best of judgment assessments. Also, companies should ensure that they track and monitor the duration of stay of their out-of-station employees, that's the itinerant workers, so as to ensure that we do not, receive best of judgment assessments, and also interest and penalties do not crystallize. So thank you so much, Martins, for providing that clarification on itinerant workers. So I'll be moving on to the next case, and this is the case between Bolt Operations OU versus the Federal Inland Revenue Service. So as a lot of us are aware, Bolt is a non-resident mobility service company, out of Nigeria. Its headquarters is not in Nigeria. And the company basically renders a wide range of services, ranging from facilitation of ride hailing, as a lot of us are aware, Bolt, food and grocery delivery, car sharing, and, as many other services that they render. So what happened was that the FIRS sent a letter to Bolt, appointing Bolt as, for the purpose of VAT collection, and Bolt rejected the nomination or the appointment on several bases. So the reason why Bolt refused this appointment was on the basis that, firstly, its suppliers are Nigerians, and they simply just use the platform to provide services to their customers. Therefore, Bolt believed that it should not be saddled with the responsibility that should ordinarily be that of the Nigerian suppliers with respect to the services they provide. Also, Bolt stated that it should only be liable to charge, withhold, and remit VAT on the commissions earned directly from the drivers and restaurants that use the platform, as this would be the only taxable supplies, provided by Bolt. The FIRS, on the other hand, insisted that Bolt was obliged to collect VAT on all invoices processed through its platform, regardless of whether Bolt is the supplier of the goods or services. And Bolt was, obviously dissatisfied with this FIRS's insistence on it being, a VAT collection agent, and took the matter or the case to the Tax Appeal Tribunal. So what did the TAT hold? In that case, the TAT held that section 10 subsection 3 of the VAT Act empowers the FIRS to collect VAT on the supply, on taxable supply made by non-resident companies, either from the recipient or taxable supply in Nigeria or such other person as may be appointed by the FIRS. Also, the TAT cited section 10 subsection 6 of the VAT Act, which empowers the FIRS to issue guidelines for the implementation of the provisions of, section 10 of the Act on the time, procedure for filing returns and payments by non-resident companies. In summary, the TAT ruled that FIRS has exclusive power to appoint such other person without any criteria, that's inclusive of Bolt, and the tribunal noted that it will be unreasonable and impracticable for the FRS to follow each individual food vendor and also each individual, driver or rider to collect the VAT due on the transactions. Therefore, the TAT ruled in favor of the FIRS. The question we have here on this case, Martins, because this is a very interesting background that I provided. Can you provide clarification on the difference between the mode of transportation provided on the Bolt platform and that run by the typical yellow taxis that we have in Nigeria? And also, if the mode is actually not different, then does this judgment negatively impact the uptake and general operations of Bolt's model in Nigeria, considering that it has enabled a lot of people to become, sort of self-employed in Nigeria, which has a current state of, high unemployment issue? So what are your views and what are your thoughts on this Bolt case, Martins?
Thank you very much for me, considering that I got to the office today using Bolt. So probably this would also impact me.
Yeah.
At some point, I may start seeing VAT on my Bolt invoices. Maybe it's already there, and I'm not already paying attention anyway. This is a very interesting case because in recent times, we've seen the particular rise of the car hailing business in the country. Not only Bolt, you have Uber, the InDrives, Ride With Me. I think that there are quite a significant number of ride-hailing platforms in the country. Some are Nigerian-based. A lot of them are not based in Nigeria. So they are the entire platform and the key drivers of that platform do not have any real structure in country. Just that drivers in Nigeria are able to access the platform, come on board on that platform, engage with passengers on the platform, and therefore be able to carry out their transportation business. Now, because of the rules that have changed in Nigeria, it's become, first of all, the government is looking to expand the scope of the application of VAT. Now, the first question which you ask is there a difference between Bolt and when I stand on the road and hail a yellow taxi? In the eyes of the law, it may not be different. Now, the reason I say that is that the VAT Notifications of 2021 tried to exempt a form of public transport from the application of VAT. Now, it defines the form of public transport that is exempted from the application of VAT as a shared passenger road transport service. So the key word is that it is shared and it is road transport service. The yellow taxis are not shared. You hail one and then you get in and it takes you to your location. It doesn't stop at various bus stops to pick up passengers. Because I think the concept of shared passenger road transport service is primarily supposed to cover the Danfo buses, the Moldwares, the PRTs of this world that will typically stop at various bus stops, and people can get in and they all share too. Nobody can claim any form of exclusivity when it comes to entering the bus. However, the definition also extends and says it excludes transportation apparatus for business or private use, or a car or ride hailing as part of the exempted services under Schedule 1. So it's clear that if you engage in car or ride hailing, it is not an exempted, it's not part of the exempted service. And now, car hailing doesn't necessarily mean that it has to be through a platform. You can stand and hail a car. So I think that there is no real difference between the yellow taxis and the Bolt service. However, you would find that if you enter the yellow taxi, it is unlikely that when you are paying, the cabman is adding VAT. So he says, oh, so you stop and you say, I'm going to Surulere from there. And he says, how much is the fare? And he says, oh, 2,000 naira. But that's exclusive of VAT. that conversation will never happen. So it is a particular challenge that those guys till tomorrow do not tend to account for VAT when you enter the ride-hailing service. Now, but government has decided that it's a bit different for the guys who do this on a platform, because one, they have the ability to aggregate a number of transporters on that platform. Rather than me chasing all of the old men driving yellow taxis on the streets, if I hold the platform on which that serves as an aggregator, I can appoint that platform and get them to get these people to include VAT. In fact, I think that's the position of the tax authorities. We believe that you are responsible for charging the passengers on behalf of these people. You are responsible for, in a number of times, in a number of situations, also collect the cash due for the service on behalf of these drivers. Therefore, I can appoint you to help also account for the platform. You will get them to include VAT. You would help collect the VAT, and you would help account for that VAT. So that was the mindset of the tax authorities in appointing both. I think there is something about that judgment that I think everybody needs to be aware of, especially if you do business with Nigeria, because both can primarily argue that they don't do business in Nigeria. What they do is that they do business with Nigeria because they've made available a platform that people who do business in Nigeria and people who live in Nigeria can meet and then engage and interact and do their business. Now, when the TAT ruled that there is really no criteria that is applicable in appointing someone as an agent of the tax authorities to collect VAT, what is then done is that it's opened a large Pandora box where anybody who does business with Nigeria stands the risk that they may be appointed as an agent to account for VAT. And I think that that's a particular fallout that non-resident companies doing business with Nigeria would probably should begin to be aware of and say to themselves, what's the status of my business with Nigeria? What's the extent of my interactions with companies and people in Nigeria? And does that interaction expose me to a risk that I may be appointed as an agent of the tax authorities, even though I do not have any fiscal structures in country? I think that that's a particular big fallout of this judgment. It's very debatable whether anybody can be appointed as an agent of the tax authorities. However, if you stick to the law, it does not in a sense contain any clarification or qualification that needs to be taken into consideration before you can be appointed as an agent. It does appear that anybody who does business with Nigeria can be appointed. Again, like I said, it may lead to a scenario where I have an interaction with 2 or 3 companies in Nigeria, and all of a sudden I get a letter from the tax authorities, even though I do not have any fiscal presence in country, even though I do not do business in Nigeria, and I get a letter saying, hang on a minute, you've been appointed as my agent. I want you now to begin to account for VAT on the transactions that you do with Nigerian companies. And the fallout of that ruling may also extend beyond VAT, because there are other aspects of law in terms of who can be appointed as an agent of tax authorities, that in which there is again no very firm clarification of qualifications. So that's something, again, like I said, non-resident companies will probably need to begin to watch out as you begin to engage Nigerian companies and maybe begin to speak to consultants or tax advisors and say, how may this affect me and how does this expose me to a risk that I may then have a tax obligation in Nigeria, which because the tax obligation doesn't necessarily mean you have to pay taxes. It may be, again, that you've been appointed as an agent. Because in this instance, the tax authority wasn't very particular about both paying VAT on its own fees. It was about the transportation fees and transportation service that people were rendering using the platform provided by those, that was what drew them or caught the attention of the tax authorities in this particular instance. So again, that's something I think people need to be aware of. The risk that as you continue to do business with Nigeria, regardless of the fact that you do not have an in-country presence, you may run the risk of being appointed as an agent of the tax authorities to begin to account for VAT on those transactions.
Okay, thank you so much, Martin, for that clarification. You know, how you provided the clarification on the difference between Bolts and then, you know, other yellow taxi providers, and also on how this judgment might impact foreign companies who are willing to invest in Nigeria. One of the key takeaways for me, it seems like the TAT's position appears to be hinged on the principles of convenience and management of, you know, cost of collection of taxes. So it seems that as far as the TAT is concerned, it's actually much easier and cheaper for the FRS to deal with marketplace platform owners rather than the sellers. So please, it's important for foreign companies and all of us participants on this edition of Tax Chat to take note of how this judgment would impact our businesses. I'd like to also state that we can ask questions as we go on with the tax cases. I can see that there's been a number of questions posted by participants, and we would like to take some of those questions from participants before we go on our short break, which will happen at 11 a.m. So one of the questions that we have is on the CESL case. The participant asked, what about levies, etc., that relates to business premises? Should CESL be paying those levies if they actually do not have an office in Bayelsa? So the participant is speaking directly to business premises. Should CESL be paying business premises since it has no office or no premises in Bayelsa?
Okay, my personal opinion is that if you don't have an office, then you should not be liable to a business premise levy. I think that levy should be due from those who have an actual business premise. However, I think if we come back to the dictates of the tax law in the first instance, I don't know whether the actual facts of this case, because I haven't been involved in the case itself. But it is possible that you don't own a building in a state, but you still have a premise that is available for your use, that you, in a sense, are responsible for. Now, because we've seen instances where people have said, oh, the premise is in mine, I don't own the premise. But if you are responsible for that premise and you conduct your business activity from that premise, it may expose you to a business premise levy, even though you don't own that particular premise.
Okay, thank you very much, Martin. It seems like a lot of participants have questions on the CESL case, maybe because it was the first case that we addressed. So another question from another individual is, did CESL appeal the TAT ruling? And were they liable to the infrastructural levy too? So the participant is referring to the Bayelsa State Infrastructural Maintenance Levy. So did they have to pay this levy alongside the payee taxes? And also, did they appeal the TAT's judgment?
Okay. I'm not aware whether they filed an appeal. I know that there's been no appeal ruling from the Federal High Court so far. And a number of these things typically take time. So it's a space that we will continue to watch. Now, again, it looks like the entire plank of CESL's challenge at the TAT was that the TAT was not or did not have the jurisdiction whatsoever to even hear that case. So they were not particularly challenging whether they were liable or not to those taxes. It was the fact that the TAT should not even be hearing that case, because those were matters that were outside of the jurisdiction of the TAT. Again, and the TAT rules that they should or they could hear that case because those levies were driven out of laws and regulations that came out of the specific laws stated in under Section 59(2) of the FIRS Establishment Act. Lawyers will typically tell you that unless you've actually pleaded a particular issue, it's unlikely that the judge would extend his ruling to cover something you've not pleaded. Now, maybe if they are challenged on the basis that they were not liable to the infrastructural levy, maybe the ruling would have been different. But because the plank of their challenge was that the TAT in the first instance was not did not have jurisdiction over the matter, that was what the TAT particularly focused on in its own way.
Okay, thank you very much, Martins, for your response. There's a general question. So this question does not pertain to a certain case. So the participant asked that, is there a reason a lot of these judgments end at the TAT? So from what I read, what the participant is trying to say is that a lot of taxpayers end up getting, rulings from the TAT and do not appeal these rulings or take these rulings to the appeal to the next level, next court level. So what the participant is asking is, can you share your view on why a lot of these rulings are provided by the TAT and taxpayers, probably are not willing to appeal the judgments from the TAT?
Okay, Nigeria is not a very litigious society. If you take a particular matter and then go to the internet, put it on Google and say list of decided cases in India, for example, on any particular matter, you will probably find hundreds of decided cases on that particular matter. You will be spoiled for choice. If you take any particular tax matter in Nigeria and put list of decided cases, you probably, for a number of them, you will find nothing. So we're not a particularly litigious society. And the negative impact of that is that a lot of times it doesn't help in deepening the interpretation and the practice of tax laws, of taxation in country. So when people go to the TAT and the matter is resolved one way or the other, you find that a lot of people just say to themselves, what's next for me? How long will it take before I get a ruling by the Federal High Court? If it's not favorable, and I go to the Court of Appeal, if it's not favorable, I might be stuck here for years. In that time, I'm spending costs on advisors, on lawyers, and that for me is why you find that after the TAT, if they do decide to go to the TAT, they tend to drop the matter because they consider the time, the cost, and they decide maybe this is not just worth it. I would rather just go and pay and close out this particular matter. The challenge you have, again, like I said, is that it doesn't help in strengthening the practice of tax in the country. It doesn't help in strengthening tax administration. And when you then have that particular matter in future, you are likely just going to go and pay because, again, nobody wants to challenge. What we really need to do is first of all, ensure that these cases don't take that long. If you have a process where in a short while or in a short period of time, you can take a tax matter from the start to the end, all through the entire process. Maybe people will be more willing to challenge, and then, like I said, it will continue to then help us strengthen and deepen the practice of tax in country.
Thank you very much, Martins. I think we can take one final question before we go on our break. And what the individual has asked on one of our social media platforms is, does it mean that online marketplace businesses now have additional VAT obligations in respect of domestic transactions between taxable persons resident in Nigeria, or do they have to wait to be appointed by the FIRS as a VAT collection agent?
Okay, first of all, before you will be appointed as a VAT collection agent, it has to be established that you are in interaction with transactions that are vatable. There is no point appointing someone as a VAT collection agent if they are not involved or do not have any interaction with a transaction that is, in a sense, liable to VAT in Nigeria. So that's one. Now, once you are involved or you have an interaction with a transaction or series of transactions that are liable to VAT in Nigeria, you run the risk that you may be appointed as an online collection agent. Now, the primary driver for the introduction of that provision in the law is that a number of these online platforms engage with business to customer or provide a platform for business to customer transactions where the customers do not have, or the tax authorities do not have the ability to track all of those individuals, all of those individual customers one-on-one. So it is a lot easier to track that aggregator and say, we are aware that 1 million transactions take place on your platform on a daily basis. You have access to these transactions. You have access to the money that changes hands with respect to these transactions. So please, we would like that you institute a process that allows us, first of all, charge VAT and then collect the VAT due on those transactions. So yes, you are likely going to be appointed as an agent of government if you have an online platform where a significant business to customer transactions take place that are liable to Nigerian VAT, and you have access to the cash that change hands for those transactions. Again, if I don't have access to any of the cash, it may be foolhardy to then appoint me as an agent. Otherwise, you're expecting me to then modify my platform to ensure that I can then have access to that cash so that I can then collect the VAT. But I think if you look at those that have been appointed so far, one thing that is consistent is that it's predominantly B2C transactions. The platform has access to cash that they exchange hands, and the transactions are already deemed to be liable to Nigerian VAT in the first instance.
Thank you. Thank you for your response, Martins. I did say that that question I asked you was the last one, but we have about 2 minutes before we go on our break. And it seems like a lot of participants are, if they had their way, they would appeal the ruling in this case between CESL and Bayelsa State. So somebody has mentioned that doesn't the residency rule apply to the employees of the taxpayer in determining where the PIT gets remitted? So this person is totally, opposing that ruling. That what happens to the residency rule that a lot of us are aware of?
Okay, so the residency rule is the primary rule. Just that in 2011, we introduced what we call the concept of itinerant workers, where someone had the primary place of residence in one state, but because of the nature of their work, they move from place to place and they spend a good number of time in those places. And I think Mumi already defined what an itinerant worker is at the beginning of the session. And it's someone who spends a minimum of 20 days in at least 3 months in a state different from his primary place of residence. Now, if you do not meet that criteria, you can go to Bayelsa and work do work for 2 days or 3 days every now and then. You will not qualify as an itinerant worker. Your primary place of residence will still be the criteria to determine who your PAYE goes to. You need to qualify as an itinerant worker before that rule kicks in. And like I said, it's a minimum of 20 days in at least 3 months in the relevant assessment year. So yes, the residency rule is still there. It's still the primary way of determining where your PAYE tax should be paid to. Just that in certain situations, some people may qualify as an itinerant worker because of the nature of what they do and because of the amount of time they then spend away from their primary residence in other states.
Thank you very much, Martins. Your answers were very explanatory. So this is 11 a.m. now. We need to go on a break. I want Martins to get himself a glass of water because he has been speaking for quite a while. Let's get ourselves a cup of coffee and we'll be back in 3 minutes to continue the session. Thank you everyone for staying with us so far.
This isn't the world you grew up in. You've become an expert in areas of the business that go well beyond tax. Your organization is more global, increasingly digital. Your business models are more complex. Compliance is getting complicated, and penalties are more severe. Governments around the world have moved towards taxes that are easier to collect and administer through technology. Suddenly, your board wants to hear from you about risks and opportunities, and you're not the tax leader you were when you started out. You know how to transform your tax data into meaningful insights. And if you're anything like the other ambitious, future-thinking tax leaders out there, you've managed to do all of this with fewer resources and less budget. Maybe these tools still feel disconnected from one another. Not anymore. Introducing KPMG Digital Gateway, the single platform solution that gives you access to the full suite of KPMG tax and legal technologies you use. Across our global network, we are investing $5 billion over 5 years in technology, people, and innovation to accelerate the digital transformation of KPMG firms and our clients, and more than $1 billion in tax and legal technology specifically in that period. KPMG Digital Gateway puts the fruit of our investments at your fingertips, bringing together the expertise of alliances, technology solutions, and the KPMG global network of professionals into one integrated platform. Putting our investments in machine learning, deep analytics, visualizations, and AI technologies in one place, all driven by the rich data you already have on hand, powered by Microsoft Azure, built on the cloud. KPMG Digital Gateway and the teams behind the solutions are working together to help change the lives of tax leaders and their teams, redefining target operating models and transforming tax functions for the new world order. You've done so much already. Just imagine what the future of tax will be with a platform like this behind you.
Thank you, everyone, and welcome back from the really short break that we had. So we will be going into the next case, and we'll be discussing, the facts of the case and the judgment that was held. So in the case between Investment Holdings Limited versus the Federal Inland Revenue Service, what happened in that case? The FIRS assessed the company to additional amounts of about 95 million naira after conducting a tax audit exercise on the company's record. The company disputed the withholding tax assessment. However, it made a payment of about 3 million, which is alleged was in respect of the tertiary education tax, that's a TET liability, and did not make any payment in respect of the withholding tax liability assessment. Also, the company argued that the FIRS has no power to assess it to withholding tax, as withholding tax was not explicitly listed as one of the applicable taxes under Section 2 and Item 9 of the first schedule of the FIRS Establishment Act. And also, the FIRS, on the other hand, argued that it acted within its legal jurisdiction in line with Section 66 and 78 to 81 of the CETA to have assessed the company to additional tax and collect withholding tax on liable transactions. So what did the TAT hold in this case? The TAT held that withholding tax is actually not a separate tax type, right? And that it just forms a collection of CIT, and that the responsibility to administer and collect the relevant taxes is granted by the FIRS in the FIRS Establishment Act, which established it. And therefore, the FIRS acted within its powers to have assessed the company to additional withholding tax liability. The TAT, that's the tribunal, also stated that the Minister of Finance has issued regulations for the administration of withholding tax, and the FIRS has also acted on this. So on this case, the question that, we'll be asking, that I'm sure that a lot of people have, somewhere in their mind, is that the TAT was very clear on the fact that the FRS can administer withholding tax, even though it is not specifically listed in the schedule of the FRS Establishment Act. But one question I think a lot of us here have is that, that might not have been answered by the TAT, is who really has the authority to issue regulations as it pertains to operations of withholding tax? Is it the Ministry of Finance? Is it the board of the FRS? What was the basis for the regulations that was even issued by the Ministry of Finance, or Minister of Finance, sorry? Over to you, Martins.
Thanks, Umi. This is a very interesting case. I wrote an article a few years ago around the application of withholding tax and what's right or what of the, who has the authority to issue any sort of direction. Now, the plank of this particular case wasn't who has the authority to issue direction. I think the plank of this particular case was generally whether the FRS in itself had the authority to even account for withholding tax, so that withholding tax at all should be considered by the FRS. And the company based its position on the fact that if you look at, again, it comes down to the same, almost the same issue as the Century case, where Century also held that the TAT did not have jurisdiction to handle specific laws because they were not listed under the Schedule 59(2) of the FRS Establishment Act. It's the same thing here, because if you look at that, the schedule of tax laws there, you will not find withholding tax regulation. It is not there under Section 59(2) of the FRS Establishment Act. But it then says, or it then extends it, it mentions specifically certain tax types, certain tax laws. It then says any regulation issued to administer all of those taxes. So if you take that into consideration, I think the TAT was right when he said that the withholding tax regulation was issued subsequent to and in furtherance of the administration of the Companies Income Tax and Personal Income Tax Act. So the withholding tax was not specifically listed there because it's not a separate genre of tax. It's another payment of income tax. But the liability withholding tax is driven, first of all, not only from law, but also a regulation that was issued pursuant to the laws that were specifically listed under Section 59(2) of the FRS Establishment Act. I think the real challenge for me is that you then go to the law itself, from where the obligation or from where the regulation supposedly derives its legality from. You would see in the way that the law was drafted, I think Section 81 of the Companies Income Tax talks about deduction of tax and source. And it says income tax accessible on any company, whether or not an assessment has been made, shall, if the service so directs. I think the word that he uses is if the service so directs. The original version of the law actually uses the word if the board so directs. The board or the service is the FRS. And so many people have typically argued that it is the board or the service, the FRS in itself, that has the authority to issue regulation on the administration of withholding tax. Because the law says if the service, or like I said, the original version says if the board so directs, not if the Ministry of Finance so directs, not if the Minister of Finance so directs. If you go to the VAT Act, it's clear who has the ability there to issue a modification to the exempt list. And it mentions the Minister of Finance. It doesn't say the board of the FRS. So there's always been that argument as to who has the authority. And the law seems to suggest that it is the board or the service that should issue direction as it pertains to the administration of withholding tax. Unfortunately, that was not a matter that was under adjudication here. What the company took to the TAT was whether the FIRS had any right to even administer withholding tax in the first instance, given that it was not specifically listed amongst the laws in Section 59(2). And what the tax authorities, what the TAT ruled is that, even though it is not specifically listed, because it is not a separate genre of tax, to the extent that it is driven by regulation that emanates from the laws that are specifically listed under that schedule, then therefore it can be administered by the FIRS. I would have been happy. I would have been happier if one of the things that were placed before the TAT by the ministry or the Minister of Finance would serve the purpose or would qualify as a regulation under the Companies Income Tax Act, and whether it is the Minister of Finance that has the authority to issue the regulation or the board. And the reason why this is very important is because over time there has been several I will use the word direction in parentheses issued by the FIRS around the administration of withholding tax. And I use the word direction because if you look at the section I read, it does not state unequivocally what form that direction should take. Should it be in form of a public notice? Should it be in form of a circular? Should it be in form of a regulation? Should it be in form of a guideline? It is not clear today what form that direction should take. And we are all aware that with respect to withholding tax, there is the withholding tax regulation issued by the Minister of Finance, which the TAT already referred to and said because that regulation has been issued pursuant to the CETA, therefore it's valid and it's operational. But the FIRS has also issued several public notices on the application of withholding tax. We know about the most popular one, number 2006/002, which talks about several parts around which provides clarification around several issues. One of which is the application of withholding tax in the ordinary course of business. One of which is the exemption granted to non-resident companies from withholding tax. All of these are directions, or all of these are information. All of these are I don't want to begin directions in parentheses issued by the FIRS on the application of withholding tax. Are these things valid? Do these things have the force of law? Can we treat them as direction issued by the service of the board as provided under Section 81 of the Companies Income Tax Act? And if they are, then should they have the legal force of law? I think those are some of the things that I would have loved that the TAT wouldn't consider. But like I said earlier, it's only the matters that are placed before the TAT that they can then provide a ruling on. So those things are still outstanding, if you ask me, on issues that pertain to the administration and the application of withholding tax.
Thank you very much, Martin, for the clarifications you provided and your view in respect of the case. I think the TAT's decision really reiterates a outstanding position that withholding tax is not a separate category of tax, but rather a method of collecting income tax in advance, just like you said. So thank you for your comment in respect of this case. I'll be moving on to the next case, and it's between a company called Little Company Nigeria Limited versus the FIRS. So Little Companies, I'll call the company LTN going forward. LTN's PAL is domiciled in Koyi, MSTO, that's one of the FIRS tax offices, and was transferred to another tax office in Ajah, on the basis that the FIRS has the legal authority to unilaterally transfer a taxpayer's profile to an appropriate tax office based on segmentation policies. The FIRS argued that the service had the legal authority to unilaterally transfer, the taxpayer's profile to the tax office based on segmentation policy, and also cited several circulars and public notices that require taxpayers to file their returns at the tax office nearest to their operational base. LCN was also assessed to best of judgment VAT assessments, and had series of meetings with the FIRS in this regard. And I'm referring to the office where its file was transferred to. And there was a condition given to LCN to defray the VAT liability. And it was promised, the FIRS did say that once the liability was defrayed, the company's file will be moved back to Ikoyi MSTO, where it was previously domiciled. So after LCN had remitted or defrayed the liabilities, the FIRS reneged on its promise, and therefore the company was dissatisfied with the entire events and actions. After all, they did remit, and the file was not, returned to the tax office where it was previously domiciled, and they appealed the case. They filed the notice of appeal at the tribunal. So after the tribunal, that's the TAT, had looked at the arguments from each party, that's LCN and the FIRS, the tribunal condemned the unilateral relocation of the company's tax records from Ikoyi MSTO, that's the previous tax office, to the new tax office in Ajah. And it stated that the guidelines and policies are tools that aid the FIRS's fulfillment of its administrative mandate under the law, and they in no wise override the provisions of the law. In this case, the TAT resolved all matters in favor of Little Company. Martin, the question that I would like to ask on this very interesting judgment is that, does it mean that taxpayers, that's the participants, those of us that are here, does it mean that taxpayers can now decide where they want their tax file to be domiciled? If my tax file is in FIRS Ikoyi, I can decide that I want it to be located in FIRS in Surulere. And can this not be challenged by tax authorities to say that, we are challenging this ruling? The TAT referred to the practice and law in this matter, but there is a law on, but is there really a law on the domiciliation of tax files? That's where taxpayers' files can be domiciled. I can see that you're smiling, Martin. What's your view and what are your comments on this?
Yeah, because I found the judgment in detail, see. First of all, the TAT, the plank of the FIRS's challenge at the TAT was that it was their practice and administrative procedure as to segmentation and how companies are then assigned to various tax offices. And the TAT countered by saying there's a difference between the legality and also practice and administration. Unfortunately, I read that judgment back and forth. There was no reference to the particular legal framework under which the TAT sought to or decided to overrule the FIRS for this particular matter. And that's probably because there is really no law that says this is where your tax file will be domiciled. It's always been a matter of practice and a matter of administrative convenience for the tax authorities. When I started out in tax practice, we didn't have the LTOs, the MSTOs, and the MTOs. We didn't have, there's several tax offices that exist today that didn't exist at that particular point in time. I remember when the FSI focused tax office was opened, probably just about over a decade ago. So as new vistas of opportunities begin to open in the Nigerian economy, the tax authorities have also tried to also keep tab of that and trying to expand their knowledge base, also trying to, in a sense, focus or create focus skill set in various industries. They recently opened a non-resident tax office. We didn't have that 5-6 years ago. So it's ongoing. You will continue to see that. Again, it's practically being driven by administrative convenience rather than legality. So that's why I was a bit surprised that the tax authorities actually made reference to a difference between legality and practice without drawing reference to that legal framework on which it made that decision. It's also very important for us to understand that even in the first instance, when you register, you are assigned, when you incorporate the company today, you automatically assigned a tax identification number. The tax identification number that you are assigned is allocated to a particular office, and that office is derived from the tax office that is closest to the registered address that you indicate on your CAC incorporation documents. Again, that's not legality, that's administrative convenience. Because again, if you say that your registered address is in Ikoyi when you are incorporating your company, because I would like to make it easy for you to carry out your compliance obligations, I would assign you to the nearest tax office closest to that address in Ikoyi. Now, as you begin to provide services, as you begin to provide a bit more accounting information, financial information, I would then, that's they will then make a determination and say, we do not think that this current office still has the skill set to deal with your tax compliance issues, because we've seen from the additional financial information that you provided as you started to carry on business in the country, that you are into financial services and you are a large taxpayer, or that you are into oil and gas and you're a large taxpayer. Therefore, we've assigned you to a more suitable tax office that we think the relevant skill sets to deal with your tax compliance issues existing. So that's what is always been. Unfortunately, the TAT has ruled in this matter in that instance. So I expect that the number of people might then be more emboldened to begin to challenge the transfer or movement of their tax files from one tax office to the other. But we'll see how that goes in future. But to me, I think that the administrative convenience that we've seen that have been applied, and also the domiciliation of skill sets, which has also led to FIRS also building significant knowledge in certain industries, is gone a long way in helping tax administration, and we should stick to that, even if it means that our files may then have to be moved to another tax office.
Thank you very much, Martin. Thank you for your comment. I've been looking at the time, and I think that we barely have about 30 minutes left. So I'll just try to run through one or two more cases before we take questions from the House. So the next case is going to, we'll be discussing is the case between Checkpoint Software Technologies Nigeria Limited and the FIRS. So I'll be calling the company CST going forward. So what happened in this case? The FIRS issued notices of administrative penalties for the late filing of CST's 2019 and 2020 CBC notifications. That's the country by country transfer pricing returns. CST, on the other hand, objected to the validity of the CBC regulations and accompanying penalties, stating that they were illegal, they were invalid, and even beyond the authority of the FIRS by the FIRS Establishment Act. And the FIRS board was non-existent during the relevant period. So in this case, the tribunal ruled in favor of CST, stating that indeed this country by country regulations, that was issued in 2018 was not issued by a properly constituted board of the Federal Inland Revenue Service, as mandated by Section 61 of the FIRS Establishment Act, and therefore the penalties cannot stand. The TAT also rules that international agreements were not automatically enforceable in Nigeria until they have been domesticated. So the question here, Martins, is that the TAT nullified the regulations principally on the basis that they were not issued by the board of the FIRS, as there were no legally constituted board at that time. Does this really mean that the TAT would have been more comfortable with the regulation if they were issued by the board, that's the FIRS board? And also, does the board actually have the authority to introduce regulations that are not supported by existing laws in Nigeria?
Again, this is also another interesting judgment, and we do have quite a lot of them. And that's the beauty of jurisprudence. It helps you open another vista or another window of issues that you probably may not have seen or considered earlier. First things first is what was before the TAT was whether those regulations were validly issued. And the TAT rightly ruled that in the absence of an FIRS board, because if you look at the FIRS Establishment Act, it is the board of the FIRS that is authorized to issue regulations in furtherance of the administration of the provisions of the relevant tax laws. So I think, in my opinion, I think the TAT rightly ruled that in the absence of a board, it is difficult to conclude that those regulations were validly issued. That was the issue before the TAT. An issue that was not before the TAT, that it would have been also interesting to know their view or to listen to the view of the TAT on, is whether those regulations would have stood the test of time if they have even still been issued by a validly appointed board of the FIRS. And the reason isn't very far-fetched. The section that gives the board the authority to issue regulations seems to suggest that the regulations that are issued should be in furtherance or should aid the process of administering already provided for provisions of the tax law. And a number of commentators have argued that some of these regulations, irrespective of whether they were validly issued or not, may have gone beyond administering validly, legally established provisions of the already established tax laws. And that some of these regulations were, in a sense, introducing new laws that did not exist. Because the board cannot take over the position of the National Assembly. It is not in the board does not have the rights to enact into law provisions that do not exist. When they issue a regulation, it should be to define or clarify an existing process that is provided for under law. So but again, that matter was not under adjudication by the TAT. That matter has not been brought to the TAT in this instance. So the TAT could not rule on that matter. What was brought to the TAT was the issue of whether those regulations were validly issued to the extent that the board did not exist, and so the board could not have approved their issuance. I think a separate matter that would probably at some point go before the TAT or the High Court is whether the board can, when validly constituted, issue regulations on matters that are not already contained in existing legislation. So it's a thin line between administering existing provisions and then trying to introduce a law through regulation rather than through an act of the National Assembly. So I think that issue and that line still remains unclarified, and is something that we should watch out for going forward.
Thank you very much, Martin. To add to what you said, the TAT's decision actually, sort of introduces an air of concern about the legality of both the income tax and transfer pricing regulations and, other standards in Nigeria, because where the decision of the TAT is upheld by higher courts, I'm saying the Supreme Court, then it may make all actions taken by the FIRS, especially regarding the imposition of penalties and any form of non-compliance, to be illegal, null, and void. So we're going to watch this space and see how this will, span out. I'll be discussing the final, I think this is going to be the last case, so that we are able to take questions from participants. And this is the case between INT Towers Limited and the Federal Inland Revenue Service. So in 2021 financial year, no, 2021 year of assessment, I stand to be corrected, INT filed its returns on the FRS's tax Promax portal, that's the online filing portal. And subsequently, the company was assessed to NIDA levy of about 488 million naira. And as we are aware, NIDA is 1% of profit before tax. And, on the basis that the FRS claimed that INT was liable to pay this amount because, it's a telecommunications company under the NIDA Act. The company objected to the assessment by emphasizing its position of not being liable to NIDA, as it is an infrastructure service provider to telecommunication companies and not a telecommunication company in itself. The FRS disputed this by insisting that INT, that's the company, is a telecoms company, even after. So one interesting thing to note is that the company, has enjoyed the pioneer status incentive for telecoms companies. And, the FRS stated this in its argument and also issued a notice of refusal to amend, the liability. INT, being the company, was seriously aggrieved by the FRS's assessment and filed a notice of appeal. I'm sure a lot of us are interested in knowing what the ruling was in this case. The TAT did rule in favor of INT after verifying from Section 157 of the Nigerian Communications Act and the Wikipedia definitions of telecommunication company, that INT is actually only involved in the provision of infrastructure and not a telecommunications company in itself. Also, the provisions of Section 12, subsection 2A of the third schedule of the NIDA Act is clear and unambiguous. This was stated by the tribunal in respect of qualifying companies and enterprises liable to the NIDA levy. In summary, the TAT ruled in favor of INT. So an interesting question in this regard, because the decision of the TAT in this case is that INT is not a telecommunications company, which is quite interesting in the sense that the company enjoys benefits as a telecommunications company under the pioneer status incentives, which essentially grants a tax holiday of a period of about 3 to 5 years. That's for those that are not aware. However, the company has, by its decision, clarified that it is not a telecommunications company. So, Martins, what is your take on this? Does this really create a sort of inconsistency in the application of the tax laws and incentives? The PSI, that's the incentive status, is granted by the NIPC and not the FRS. Should the NIPC then be bound by this decision of the TAT in deciding the classification of businesses it grants pioneer status to? So it just shows a bit of inconsistency. Martins, what are your views on this case?
Okay, I'm not particularly sure I would say that there is or there are any inconsistencies. And that's because we see this every day in practice, where we constantly have to engage the tax authorities on a different matter. My primary focus is energy and natural resource. And a lot of times we go to the tax authorities and we're having arguments around whether a company is an oil and gas company that has the obligation to withhold VAT at source. And the tax authorities would say, oh, you provide services to oil and gas companies, so you're an oil and gas company. And I've always found that argument very amusing. And I think my first pushback every time is that all of my clients, all of my specific clients in KPMG Nigeria, without any exception, are oil and gas companies. So am I an oil and gas company? Is KPMG Nigeria an oil and gas company? And the answer is clearly no. It's clearly no. I've seen catering companies where all of their primary focus, they have two major clients. I've seen a catering company, they have two major clients. they earn 99% of the revenue from those two clients, and those clients are oil and gas companies. So are we going to say somebody who cooks soup and rice every afternoon to serve lunch is now an oil and gas company? Fairly no. But yes, they provide services to the oil and gas industry. Their primary focus is providing services in the oil and gas industry. They do have a history of the required safety and health procedure. They understand all of that. So if an oil and gas company wanted someone to come offshore to serve food, they probably will engage them. It doesn't change the fact that they're a catering company. So I think that is the same framework that applies in this instance. You can be a supplier or a provider of services to the telecommunications industry without necessarily being a telecommunications company. It doesn't change the fact that you provide or that you facilitate the provision of services in a particular industry. It won't change that fact. So I think we need to open our minds to that possibility, that the fact that you provide services to a particular industry doesn't necessarily mean that you are now that industry, or that industry then defines who you are or what you are. So I've seen a client who, what they do is that they provide tugboats. If you have a vessel, they will tow your vessel to dock. They will tow it out of the dock. Now, it's not their fault that the majority of vessels that they are towing belong to oil and gas companies. You then say, oh, they're no longer a tugboat vessel company, they're now an oil and gas company. That's not correct. That cannot be correct. So I think that the TAT did not err in that fully. I think that you can draw that distinction between being a service provider to an industry without saying that industry or that then defines who you are, or then makes you an industry player. That's how I see it.
Thank you very much, Martin. So just to add to it, so from what you said, the TAT's decision is literally based on the strict and literal interpretation of the law, and this was sufficient to address the main issue of the appeal. So thank you very much, Martin. The final case we'll be discussing is one that I'm a bit passionate about, because this has, provided much clarity that we need in respect of tax treatment of bad debt, because we have, quite a number of taxpayers who have had this bad debts disallowed in previous audits and maybe ongoing audits. So this case was between the NFP Microfinance Bank PLC and the Federal Inland Revenue Service. And what was the crux of the case? NPF, that's what I'll be calling the company going forward, had classified bad debts, or did have classified bad debts, overdraft facilities, and promotional relations expenses as allowable expenses for CIT purposes. But when the FRS came to review the tax and accounting records of the company for 2017-2018 of assessment, the FRS disallowed all the expenses, that's the ones I've listed, the bad debts, the overdraft facilities, and the PR expenses, on the basis that they were not tax deductible. After several correspondence between between NPF and the FRS, NPF had to file an appeal before the TAT, insisting on its position that the expenses were treated as tax deductible in accordance with Section 24 of the Companies Income Tax Act. What was the TAT's take on this matter? The TAT ruled that the Companies Income Tax Act, I'll be calling it the state tax going forward, does not require the FRS's approval for bad debt once it has been proven to be bad, before it can be allowed for tax purposes. So the TAT ruled in favor of NPF with respect to the bad debts, as NPF was able to define that the debts were indeed bad, in line with the SITA. Also, the PR expense actually did not pass the rent test, and for the expense to be necessary, it must have been required for the continued existence of the company. Therefore, the TAT ruled in favor of the FRS in this regard. So I can say ultimately that the matter was resolved partly in favor of the FRS and partly in favor of the company, that is NPF. So the question here is, I think for the benefit of our participants, Martin, could you please explain what the difference is between bad and doubtful debts? And has it been made clearer by the TAT judgment that I just summarized?
Okay. Unfortunately, I don't think so. And I would have loved if the judgment had delved into creating a difference between bad and doubtful debt. And because if you look at what the TAT has basically said, or done, is say if a debt is bad, then you don't need the satisfaction of the board. You don't need the board to be satisfied. In respect to that particular expense, versus bad is bad. It's a lie. It's only for doubtful debt that then needs to be estimated to the satisfaction of the board before you can then claim it as tax deductible. But in terms of what's the difference between bad and doubtful, so it looks like it's now left the accounting definition of both terms. If the accountants have made the determination that this debt is bad, the tax authorities are obliged to follow through with that and accept it as bad. If the accountants have made the determination that this debt is not bad, but it is doubtful, then you then need to prove to the satisfaction of the board that the estimates that you've made of how much you can collect from doubtful debts is okay before it is allowable. And that's something I still probably struggle with because to my mind, there's really there should be no real difference between bad and doubtful debt. To my mind, if I believe that the debt is bad or doubtful, I should be able to take a deduction for it immediately without having to satisfy another condition, other than the fact that account, those provisions which management has made, has been satisfied as being true and fair by an independent auditor. So for me, that certification by an independent auditor of either bad or doubtful debt should be sufficient for both to be allowable, without me having to prove anything to the satisfaction of the board. Unfortunately, that's what the law says, and the TAT has upheld that so far.
Yes, thank you, Martin. You're very correct. So I can add to it and say that the judgment has, assisted to resolve the contentious matter, in respect of the absence of documents, because a lot of times during field tax audit exercises, reconciliation meetings, taxpayers are requested to provide debt certificates, bankruptcy orders, and the list is inexhaustive, just to prove that the debt has actually gone bad. So this ruling does affirm that the absence of these documents should actually not be the basis for disregarding the classifications of loans as bad debts. So thank you very much, Martin, for your comments on this case. We've been able to cover quite a number of cases. I'm sure a lot of us are aware that there are a few other cases that we might not be able to cover on this November edition because of the limited time we have. But it will be nice to answer some of the questions that our taxpayers have. Some of the questions that our audience have, because I've been seeing some of the questions they posted in the chat box. One of the questions that is being asked is, what proactive measures can businesses take to minimize their tax liabilities in light of all these cases that we've discussed, Martin? As taxpayers, what exactly can we do, or what can the participants do just to minimize liability?
Okay, I think the first thing is to keep abreast of all of these rules. We've spoken about 6 cases, and we haven't even scratched the surface of the number of decided cases that you have in 2023. We will be issuing a tax journal where we analyze the number of these cases. It's an aggregation of all our newsletters that we've also issued during the course of the year. So you need to keep abreast. You put a process in place to ensure that you become aware of these cases, you keep abreast of them, and that you understand how they impact your business. That way, you can then begin to proactively plan and avoid instances of additional liabilities. So either you have an in-house system where you address, you analyze the cases, or you engage an external third party to help you do that. But it's important that you know what is happening, how they are impacting the tax landscape, what impact it will have on your own operations, on your compliance obligations. Very, very important that you keep abreast of all of them.
Okay. All right. Thank you, Martin. There's a question that is directly directed at you. And it says, Martins did not address the comment regarding the pioneer status of INT. Probably there were other considerations leading to the grant of pioneer status, aside from being a telecoms company, or rather an affiliate to the telecoms industry. It is interesting how INT is able to argue on both sides, as it is, it is able to gain favor both from the TAT and also NIPC. So I'm sure that this participant is saying, how do you eat your cake and have it? Yes.
Okay. I thought I answered the question when I said it is possible to be involved in an industry without being defined by the industry. So I can be involved in the telecommunications industry. I can provide services to the telecommunications industry, services that are considered pioneer, services that are considered very key to the development and growth of the telecommunications industry without necessarily being a telecommunications company. So I won't say that they are not a telecommunications company because, or they are a telecommunications company because they provide those services. So that I thought I answered it already, but I'm sorry if you didn't think that answer was appropriate. So yes, it is possible, very, very possible, to argue that I provide pioneer services that support a particular industry, but I am not a telecommunications company. I can provide pioneer services that support the oil and gas industry, but I am not an oil and gas company. I've seen people develop tech for a particular industry, tech that is transformative and would have a significant impact on operations in a particular industry. But they're a tech company. They're not, so you have a tech company that develops something that would be transformative for the medical industry. And nobody there is a doctor. Nobody there attends to patients. If you fall sick tomorrow, you will not go to the tech company. Without a hospital, that technology is irrelevant. That technology is useless. The technology is for hospitals, but they are still a tech company. But they just focus on medical technology. It doesn't change the fact that they are a technology company. They're not a hospital. So if I wanted to give Pioneer, I can apply for Pioneer under a category that covers medical services, even though I'm not a hospital. So it's like, that's what it is. I can say that I've developed technology, I've developed a practice, a service that is pioneering in medical, in the medical front, but I am not a hospital. It's the same way I can say that I can pioneer something that is related to the telecommunication industry, but I am not a telecommunications company.
Thank you. Thank you for the clarification. It was explanatory. I think I'll go on to another question that says, what are your expectations for the evolution of tax law and jurisprudence in the coming years? Sorry. So what are your expectations basically in the coming years?
I think that we are seeing more and more people challenge tax administrators. I think we are seeing more and more people challenge the interpretation of the tax laws. I think we are seeing more and more people go to court. Now that's a funny phrase because you hear it, you hear it a lot these days in Nigeria's lexicon, go to court. But we're seeing more and more people go to court. It would be great if there is some form of judicial reform that, again, like I said, that shortens significantly the length of time it takes to close out a tax case. I think that would go a long way in encouraging a lot more people to challenge in court. But even without that happening, again, like I said, we've seen more and more people decide to go and challenge the tax authorities in court and the interpretation of the tax law. I think that will continue to happen. I think that more and more people will become more emboldened to take cases to the TAT and say, let's listen and hear what the tax appeal tribunal would say on this particular matter. And that will really go a long way in helping us deepen the practice of tax administration in Nigeria.
Thank you, Martinez. Thank you. Another question that we have is, a taxpayer asked that why should a taxpayer be compelled to pay liability for VAT withheld, even when the taxpayer is not obligated to charge VAT in the first instance?
Okay, because the law does allow the tax authorities to appoint you as its agent to account for VAT. Like I said, even though the tribunal typically stated that there is no limiting conditions to those who are appointed, if you ask the average person, they will say to you, oh, it's people like Bolts that law was targeted at. It's people like Netflix. So we know already that there are certain types of people, even though, again, the tribunal said there is no limitation, but we know that there are certain types of people that are targeted by that change or that provision. And like I already stated, there are people who serve as aggregators for transactions that are in the first instance liable to VAT. So if you act as an aggregator for people, for business to customer transactions that are liable to VAT, and you have access to the cash that exchange hands in those transactions, that increases your risk that you be appointed as an agent of government. I don't know of anybody who's been appointed that doesn't serve as an aggregator for B2C transactions and doesn't also have access to some of the cash that exchange hands as a result of those transactions. Because if I don't have access to those transactions or the cash that exchange hands from those transactions, how do I then even account for VAT? So yeah, it will be so out of place to ask me to account for VAT, because I'm asking myself, how do I keep track of the transaction? How do I even know how much VAT has been charged or should be charged? How do I even have access to the VAT or to any amount of money? Could I take out from my pocket and pay that VAT? So I think it would be how do they say it? Absurd. That's probably a scenario where the concept of manifest absurdity would apply if you ask anybody who does not have that kind of access to account for VAT on those transactions. I think those primary conditions would need to be fulfilled before you can be appointed an agent. But again, the TAT has said that there is no condition anybody can be appointed an agent. But I think that those conditions still need to be in place, otherwise it will be absurd.
Thank you very much. A lot of questions are trooping in. I'd like to state that we will try, or we've tried as much as possible to answer a lot of the questions that we have. But in case we're not able to answer your question, as at the end of the session, please know that we'll be posting an address or an email address that you can send your questions to, and we'll try as much as possible to reach out to you to provide the clarification that you require. One question here from one of the participants is, how will a taxpayer confirm if he or she has been appointed for VAT collection purposes? Is it just through a formal letter, or is it really implied? So do I have to sit and wait for the letter, or is it implied? How do I know that I've been, appointed as a VAT collection agent?
You will need to be formally notified. It won't be something you assume or something that is implied. I don't expect that anybody would sit down and say you should have known that you are an agent because you saw someone operating in the same sector, in the same space that you have been appointed as an agent. If it's not been formally communicated to you, then there is no implication. There is no implied appointment.
Okay, thank you, Martin. So it seems that we have about 5 minutes at the end of this session, but I do not think that I would have done justice if I do not, take this MTN case. There's so many questions on the MTN case. So I'll quickly just summarize and ask about 1 or 2 questions on this case, because quite a number of people are particular about the case. So this is the case between MTN Nigeria Communications and the Federal Inland Revenue Service. MTN appealed to the TAT, having objected to FRS's additional assessments for VAT for 2007 to about 2017 financial years. And MTN stated that the provision of software licenses and upgrades were not covered in the VAT Act before the introduction of the Finance Act. Hence, the company shouldn't be liable to VAT. MTN also stated that for VAT to apply, to an imported service, the service must be rendered in Nigeria, and the recipient of the service must also reside in Nigeria. In addition, MTN, because there were some interest and penalties assessed, MTN stated that these penalties and interest should not accrue until, the liability is final and conclusive. The FRS, on the other hand, argued that only goods and services expressly stated in the first schedule of the VAT Act as exempt are exempt. The FRS also stated that interest and penalties would accrue once the taxes were not remitted on the due date. So I'm sure a lot of us want to know what the TAT ruled in this case. The TAT ruled that the provision of software licenses and upgrades qualifies as a VATable service, as it was not listed in the first schedule to the Act as being exempt. The TAT also stated that a service is liable to VAT in Nigeria if Nigeria benefits from the service, irrespective of where the service was provided. However, the TAT stated that since MTN objected to the assessment within, the recorded time, interest and penalties will not crystallize. So one of the questions that, is being asked in this regard is, what role does, sorry, I think I missed the question. A minute, please. So one of the questions that is being asked is the nature in the recent judgment, MTN versus FIRS, it was ruled that for VAT purposes, that the place of consumption is where the payer for the good or service is located, and not necessarily the physical location where the payer's representative received the good. Applying this principle, if a Nigerian entity renders a service to a party physically present in Nigeria, but affiliated to a foreign entity who pays for the service, it's in order to say that it is an exported service and therefore not VATable. Please let me know if you'd like me to take the question again, Martins, because it's quite a long one. Or did you get the question?
I think I did. And given that we have only 2 minutes, I probably should rush and provide my position on the matter. First of all, I think I get MTN's case around whether, I think it's all around the issue of, it's been an argument we've had for years. I wrote an article about it many years ago, whether we do have a destination principle in place in Nigeria's VAT Act. Currently, the answer is yes. But until the Finance Act of 2019, I'm not sure that I would have been able to answer that question and say yes to that question. I'm not sure. Maybe the intention was to have a destination principle before then, but I don't think there was anything in our law that clearly stated or clearly communicated that we had a destination principle for Finance Act of 2019. I feel then, before that change, that you had to be physically present in Nigeria, performing a service, for that service would be liable to VAT. And that if you were not physically present, you wouldn't or shouldn't have had a VAT exposure prior to the Finance Act of 2019. The tax authorities have a different view. There is the place of precedent, because it's a matter that has been adjudicated on a number of times. You have the Vodacom case, the Gazprom case, and in both of those cases, the court, in a sense, ruled in favor of the tax authorities and suggested that we've always had a destination principle where, provided that the entity that enjoys the services in Nigeria, Nigerian VAT would apply, irrespective of where that service is performed or produced. And everyone and those who argue in support of that principle will say, if it was a good that was consumed in Nigeria, irrespective of where that good was sold, to the extent that that good was consumed in Nigeria and came to our ports, VAT would have been paid in Nigeria, and so we should not apply differently to service. But I think that the law was very different in those days. But again, whether we agree or not, the law is the law. And like I said, it's a matter that has been adjudicated on a number of times. And in most of those instances, the courts have typically ruled that we've always had a destination principle, both for goods and service. So that's the state of the law. Unfortunately, we are out of time.
Thank you, Martin. Someone in the audience said we don't mind staying 15 minutes longer, but we apologize that we have to end the tax chat now because it's meant to run from 10 to 12. I'd like to use this opportunity to say thank you very much, Martin, for the clarifications, your views, the opinions expressed. We thank you for joining us in this session, and also to the participants that joined us in this November edition of the Social Media Tax Chat. We would like to say thank you. Like I said earlier, the tax chat is bi-monthly, and we look forward to hosting you in the next edition. Also, remember, for those that were unable to answer their questions, we posted an email address in the chat box. Feel free to contact us and we will reach out to you. So thank you very much, everyone, and do enjoy the rest of your day.
This isn't the world you grew up in. You've become an expert in areas of the business that go well beyond tax. Your organization is more global, increasingly digital. Your business models are more complex. Compliance is getting complicated, and penalties are more severe. Governments around the world have moved towards taxes that are easier to collect and administer through technology. Suddenly, your board wants to hear from you about risks and opportunities, and you're not the tax leader you were when you started out. You know how to transform your tax data into meaningful insights. And if you're anything like the other ambitious, future-thinking tax leaders out there, you've managed to do all of this with fewer resources and less budget. Maybe these tools still feel disconnected from one another. Not anymore. Introducing KPMG Digital Gateway, the single platform solution that gives you access to the full suite of KPMG tax and legal technologies you use. Across our global network, we are investing $5 billion over 5 years in technology, people, and innovation to accelerate the digital transformation of KPMG firms and our clients, and more than $1 billion in tax and legal technology specifically in that period. KPMG Digital Gateway puts the fruit of our investments at your fingertips, bringing together the expertise of alliances, technology solutions, and the KPMG global network of professionals into one integrated platform. Putting our investments in machine learning, deep analytics, visualizations, and AI technologies in one place, all driven by the rich data you already have on hand, powered by Microsoft Azure, built on the cloud. KPMG Digital Gateway and the teams behind the solutions are working together to help change the lives of tax leaders and their teams, redefining target operating models and transforming tax functions for the new world order. You've done so much already. Just imagine what the future of tax will be with a platform like this behind you.